The greatest feeling you can get in a gym, or the most satisfying feeling you can get in the gym, is the pump.
Good morning, traders. Captain Jim James here with your daily brief. I live in a state where we had a storm over this past week on, I believe it was on Wednesday, and we lost power. We should have power off for up to 10 days in parts of the state. I think that the electrical infrastructure here is antiquated at best. I'll leave it there. I'm not from this state, but to not bury power lines, to me, unconscionable, especially if you head out west, any of the western states, all the power lines are buried. Well, not all of them, not on all the western states, but most of them. So when they tell you that it's not or it's too costly to do, that's complete and utter fucking bullshit. And the cost for electricity in the state is very high. So I'm not going to name the company or which state only because I don't want to get sued, but whatever. So I did plot out and chart the S&P, or not the S&P 500 E-mini going to, well, let's roll back a little bit. The Goldman Sachs gave a price target of 470, which for end of year, which to me was more than I was expecting, or at least more than I was targeting for end of year. I thought that was a very liberal estimate. And then someone else I forget who the other person was, or the other group was, but someone else put a price target of 5,000 by end of year. And then that kind of blew my face off. So I did chart out where that 5,000 move comes from and where that 4,700 move comes from for end of year. And that's somewhere. Here's that 5,000 move right there. So this is that 5,000 move that everyone's talking about, or permabulls are talking about somewhere up in here. That's 49.83, and that's what they're saying, that we're going to create a new trading channel or trade above for the rest of the year. The GS Goldman Sachs is actually looking very reasonable to say that we get to 4,700. So there's 4699.5, and this is November. Now now the Goldman Sachs estimate actually looks a little bit more reasonable. It looks more attainable if we do have any pullbacks in here. Let's say we swing back down and then we trade up and grind up the last end of December. And I think we did that last year. I think we ground it. I think most holidays we become a low volume environment and we do this slow grind that last month. You can kind of just set some call spreads, let's say at some point in November, December, and you just let them ride all the way into the holiday season. And this does make sense for me right here, but I can still see what the permabulls are saying as well, saying that we'll have S&P 5,000 by end of year. This does not bode well for the bears. If you're a bear, you don't want to be seeing this. Now, we can go to a smaller time frame here. What I'm calling for over the weekend is a move up to test and attempt to trade in an upper trading channel on the E-mini and SPY. So I'm going to make a call from Friday into Monday for an attempt to get above 4467.75, and with an attempt to try to hold that into Monday. Now, the thing you need to understand about this move up here, let me see if I can draw this out for you, is the attempt's going to be that we come up here, swing up, and attempt to land somewhere above this 44.76 or 44.72. Now, if this does not hold, we are coming down quite far. That's an issue, because if we don't hold this line up here, you're talking about a move back down to 44.29.75. A retest down here. So there's a lot of expansion of trading range in this area that we're going to encounter in the coming few weeks. You will see this trading area expand, and you'll see bulls try to push up in here, and you'll see the bears trying to retest these levels and get the bulls to take some profit off the table. We'll come on in an even closer time frame, and you'll kind of see how big this move actually would be. It's a pretty substantial move right here. So I am still calling for this move to take place, this extension. So that we're gonna make this run up here from now until Monday. On the downside risk is much greater than the upside risk. So I would be conscious of that as we move forward into Monday. If this move does not hold, you're going to look for your first price target at 44.53, and then no less than 44.29.75. Now, seasonality wise, as we get closer to OPEX on the 21st, and as we move into the month of September, the risk just keeps piling on and piling on. So maybe the bulls try to drive it up here from now until the end of August so that they fall down, or there's enough expansion here for a decent pullback. Bears get to make their money, and we continue to make that move up into the 5,000, 4,700 or 5,000 mark. This is not good news for the bears overall. Now, if you are a bull, this is great news. But though it is great news, you're talking about range expansion and volatility entering the picture, at least up in this area here, and high danger. You don't want to be buying this, and you don't want to be in this move, maybe possibly with day trades, but in reality, you want to be buying any of these retests down here. This is where the dip buy gang comes in. This is all risk right now up in this area here. So I probably will attempt to play, if we can get any kind of a pullback this afternoon or this morning, or if we just start making this move up from now until Monday, I might play this, although I am holding some put debit spreads out into late August for OPEX. I got them tagged for the 23rd, trying to catch any drop that might happen down here, any retests. I might still, with those holding those put spreads, play this next move up. I'm also playing some UVXY calls. I think I got the ones, some FDs that are expiring today, but I'll just keep adding those on from now until the end of August. I'm assuming that with this range expansion, we're also going to get some volatility mixed in here as well. Now, if we do retest down here, the fair is going to increase as we move up into this trading channel. You'll see fair increase. They will have a tendency to panic sell. So that's where you'll see that UVXY start to expand and start to spike, if not, even if we keep moving up. And I'm also going to be playing daily bull FDs, and I'm also looking for some retests down below as the month progresses. So my call for over the weekend from now until Monday is going to be a push to 44.67.75. Hope that the bulls can hold it and have some insurance as we make these moves up. Moving on to NQ. So, we have some healthy pullbacks on NQ, and even as we make this move down over here, you can see we're still reclaiming this trading channel here. You should be buying all these dips or selling all these rips up. One thing that needs to be said is that on intermediate models, even NASDAQ is not looking too rough. You're going to be looking for NASDAQ to make a challenge over the weekend. I'm going to look for NASDAQ to hit 15,122 and possibly attempt to challenge this 15,172.25. Now, as we make this move up from now until Monday, it's going to attempt to hold, and that would support that theory that SPY is going, or the S&P ES is going to make this next move up. Now, if NQ does not hold and wants to retest down here, we already know that we have major support along this line here. So I'm calling for NQ to make a move up to 15,167 by Monday. And if it does not hold this number here of 15,083, I'm looking for a major retest down below at 15,012. IWM. IWM is still respecting its trading channel. Let me scale this out slightly for you so you can take a look. You should be buying any of these dips that we're getting down here. You'll also notice this was on August 4th. We're going to go on a smaller time frame up over here. Now, what you want to be looking at is any of these dips are currently being bought, though the time to be buying dips in the IWM is when they come back down to retest this 217 level, let's say for right now, 218. This is really where you want to be starting your longs. Now we'll get a little bit closer here, and we're going to see this new channel here. This is on the 27th. This right here is on August 4th, and we really haven't traded down below here this past week. I'm a little bit more bearish right now on IWM. I'm going to say make a call for today that from Friday into Monday we're going to attempt to retest 220.62 and possibly even 217.94 in small caps. I think that small caps are going to turn out, but this trading range is very tight for this week. Now, if we do decide that we're going to make a move up, you could call this a consolidation area here for this week. We do have a predicted trading range for IWM, so you're going to be looking to buy this dip down here, 220.56. If we do get that move up, you want to look for a move that holds above 2247.4. You could play this. This is possible to play today, but I would be looking for some sort of a dip buying opportunity as well. If you're already long, you could stay long here and wait and hope that we get this jump above. But I do think that we need more expansion on this range. You will see down here that we really do want to be seeing something more like this. And this will get us to where we really need to be, which is above. Let's call it like that. You do want to see some form of a touch here, a push back down here, and a jump above here, or even a move down this deep for one more slingshot way above. So look at this expanding megaphone, I think they're calling this these days. Look for this to expand, some more expansion in the trading range, and then a larger move up over time. This might put you into late August here. I wouldn't be going long here. I wouldn't be going short. I would expect longs to make it above, retest here if they can't claim above, and expect another move down in the coming week. Tesla. Everyone wants to know about Tesla, right? We talked earlier in the week about Tesla and where it wants to go. We all know that we're buying these any dips down below here at 697.70. We know that we go full on in down below to 652 and 676. Anywhere down in here, we're going all in. Anything here, we're starting our longs, right? And I think the last video I spoke about this, and you had a perfect opportunity into the close on Friday, I believe, and then you had another opportunity later in the week to buy these dips. I think even in my last video we talked about this, and you can see right down below here, 699.98. I mean, you should be buying these at every chance that you have. So I don't know what else to say about being bullish on Tesla at this point. If you're not bullish on Tesla, you're doing something wrong. Now, we do have some other issues. There are people that probably don't want to see us continue to trade up here. And you see that upper resistance at 727.24. We made this push up here. This is just this week. 1, 2, 3, and 4. I do think that we might attempt to jump above. So from today, Friday, into Monday, I'm going to make a call that from now until the end of close on Monday, you're going to see a move up to this 749 or 750. They might let options expire today. So let's say we do a slight pullback down below today, maybe down to 710.09. And then next week we make this move up into the 728.16 level. We'll attempt to jump above here and then make a move up to 750 in the coming week. So I am bullish on Tesla. I would say today look for some pullback or even a push up to attempt to hold this 727.69 over the weekend for a run up to 750 following next week. So that's all I've got for you guys this morning. I'm going to keep these broadcasts kind of short over the coming days until we have the electricity turned back on. I have to do a bunch of maintenance around the house. I have to make sure that my home is secure. I got to make sure that my neighbors are doing well. And then I got to do maintenance on some generators that I've got up and running, make sure my wife and my kids are all safe and happy, and that the general things that can put people at ease I have to take care of. So I look forward to talking to you all on Twitter this week and over the weekend, and I'll see you out on the trading floor today.